Hi, everyone, and welcome to the Goblin Hideout, the NFT Finance Podcast. My name is Terry, and today I'm joined by my co-host Ryan. Today we're speaking with the head of product for NFTBank, Jen.
Hey, Jen, welcome. Super glad that you're able to come on the podcast today. I think maybe to kick it off, let's just do a little background on yourself and what you were doing before NFT Bank.
Great. Thanks for having me. It's an honor to be here. Jen, I lead the product team at NFT Bank, but I think being a startup, that entails just doing everything that does not require coding. Prior to NFT Bank, I was at Facebook, now called Meta, which is a name that I cannot get used to. I was working close to the team that builds CRM for the advertiser base that Facebook has. So when I first heard about NFT Bank, it made a lot of sense that there's a lot of accrued value that will be formed as we provide the portfolio management solution for NFT traders, and also the potential of NFTs kind of evolving as a true digital asset really excited me. So that's why I got to be here. And then it's been a fun ride since then.
That's awesome. So I think, correct me if I'm wrong, but I think you and Daniel, the CEO of NFT Bank, worked at a job together in the past. Is that kind of how you got queued up into NFT Bank?
That's right. When we actually met in college at a dorm and decided to take a year off to start a company together. So we did our startup when we were practically babies. But one thing that we knew when we tried that out was that we're very complementary to each other. So since then, we've always stayed really close, always talked about how we wanted to work together at some point. But obviously, other than that willingness, all the things in terms of skill set and then the opportunity needed to make sense. So we saw that this was the time. So even though I joined about a year ago, I think it was pretty clear that I would be joining at some point. But that point got expedited thanks to the NFT market kind of booming last year.
That's awesome. And so maybe for our listeners, if you could provide just a quick TLDR, what is NFT Bank and what is NFT Bank's core focus right now?
Yeah. So I think there are two sides that different types of users know us for. One type, I would say, more general NFT trader user base know us as the NFT portfolio tracker. So there, users will be able to connect their wallets and then see all of their NFT holdings, and then basically able to assess the performance of their portfolio NFT investment. And the reason why we're able to provide that insight, I think, is thanks to our ML-based pricing model for NFTs. Right now, we have the ML-based pricing model that allows us to cover about 6,000 projects at about 90% accuracy, which is a true asset for us. And the other side of the user base that know us very well is more of the NFT financialization builders. We provide our ML model to kind of empower the financialization of NFTs. So namely NFTFi, Pine Protocol, and DraftStyle. A lot of these players who are kind of shaping the industry are good friends. And then we've been providing service to them so that they can really push the agenda forward in the ecosystem.
On the note of the ML model, there was a series of articles explaining how it works. But for listeners who aren't math savvy, how would you describe, how would you do an Eli 5 of these models? How do they work? What inputs do they take? How are they trained?
Yeah, I think it's pretty intuitive, actually. Obviously, we use complicated models, which our head data scientists can get really technical about. But the gist is that we analyze the pattern of sales data and then kind of break it down by different metadata type. I think there's an assumption that rarer the item, the pricier it is, but that's not always true. We actually look at the moving pattern of sales price per different metadata, which are mostly traits, and then are able to analyze which of those traits have the most influence on the price of individual NFTs. So we kind of have that as the core baseline model. And then on top of that, we iterate to kind of monitor the market and then see unusual behaviors, for example, like wash trading. We are always about kind of capturing those outliers and then fine tuning the model. So I think we're now at least version 20 of our model. So constantly evolving and then kind of monitoring our performance that way.
Besides the fact that rare traits don't actually get higher prices, have there been any other surprising findings that you guys have found as a result of your models?
I mean, I think that was the most notable one. But obviously, it differs by type of different NFTs. Specifically, what we excel in is when there are like rich metadata, and then when there are like comparable price patterns in the real world. So one funny thing is that for metaverse, so land assets, you would think that the proximity to a mainstream location would not matter because it is metaverse. Like there's no friction in getting to a certain place. But even then, people kind of parallel the behavior that they see. The more central or like close to like a particular place that's like more popular, the price is higher. So I think those were some of the interesting findings that we had as we looked at different types of NFT prices.
Got it. Yeah, that's super interesting. One thing that you said that was interesting was you said you look at unusual behavior and monitor performance of your model continuously. Mm-hmm. And is there any other sort of facet in which you use this information? Perhaps, does NFTBank have any plans to itself branch out into NFT Finance itself? Right? Because there's a lot of things you could do with that information, right?
Absolutely. So I tried to kind of simplify who we are as we explained, but there's actually a lot that's happening on the backside of the world. So what I mean by that is because we have that financial engine, which is the base layer of financial engine is the ML price, but we're actually developing a lot more as we partner with these partners and then seeing what their needs are. So we're developing like modules that can really drive financialization of NFTs in multiple other ways. So I think one arm of the financialization participation that we're doing is like continuing to develop those modules that can really lit fire. The other side that allows us to do that job well is actually running our own little fund. So right now we have a small fund that we're testing with to do liquidity providing ourselves. That gives us good sense of what's actually needed in the market and also fine tune our financial engines. So that's, I think, another big exciting thing that we're doing, and then potentially kind of expand into a greater size. And then without trying to overwhelm the listeners, there's another side that we're in the process of getting into, which is our venture arm. I think there's a lot that we can do to help these builders kind of expedite their progress by getting help in terms of equity funding or even like liquidity providing. So we're in the process of setting up our venture arm to like more practically and directly help these builders as well.
Got it. And I think we were funded by you guys. So that's great. That makes a lot. Yeah, that makes a lot of sense. You mentioned that running your own fund and doing these integrations makes you keenly aware of the needs of NFT finance protocols. What would you say those needs are?
I think what we realized as we provided our pricing to these NFT-backed lending protocols is that what's most needed is not actually the price at the beginning of the loan origination, but it's actually the price at the end of the term. So the core problem that we realize that we need to solve is the liquidation problem. So how do people get rid of the defaulted assets when the default does occur? And I think thanks to the market situation that crashed pretty dramatically recently, we were able to identify this need. We were left with a lot of defaulted asset. And this allowed us to find the need for developing our liquidation module, which is in prototype stage right now. What we're doing there is basically kind of leveraging our price estimate to kind of find the right price at the right time so that we can minimize the loss, if not make profit off of the liquidated assets. So far, the result has been pretty exciting. We're actually making profit at around like 7% of the defaulted loans, which includes not only the asset price, but that we lent it, or like the collateral, like LTV adjusted collateral value, but also the interest as well. So we're really excited about this, and then hoping that this can also be another part of the value that we provide to the NFT financialization ecosystem.
If I'm understanding correctly, does that mean that you are able to provide a rough estimate of the price of the NFT at the conclusion of the loan at the beginning of the loan so that people can then adequately price risk and set LTV and APRs?
I think that's a good way to put it. But I think there's a little bit of a nuance in the way we are talking about price. So I would say the estimated price are more of a reference that gives us a good sense of like what the price of this NFT is. I think that value may change depending on like the timing that we ask of that price. So if for example, the loan originators who have a defaulted asset, their plan is to liquidate the asset within the seven-day period, the best time to sell and the price at which to sell would differ, right? So I think we're getting more into that, which is a little bit more exciting part, not necessarily getting into the prediction, but getting into more of the convergence with the market value that actually returns like sales of the NFTs as opposed to just suggested prices.
Gotcha. It seems like on the backbone of your superior ML model, you guys are branching out into a lot of different NFT finance verticals. What is the ultimate vision and the goal of NFTBank to become in the space?
I think when I tell people about all the things that we're doing, that's when they go, that's why you're NFTBank, instead of some name for like portfolio management or anything like that. I think our goal is to be a pillar that can really uplift the formation of virtual economy. So when we named ourselves NFTBank, I don't think we had a very, very specific like output that we were driving for, or like specific like input to the formation of that virtual economy. But we knew that we can do a lot of things by kind of focusing on the core element of the pricing, which kind of forms the basis of many of these activation. I think continuing on that path, we're looking to just kind of become a pillar and then really just help these players come up in a very fruitful way, and then also be able to leverage what we build for ourselves as well, so that there can be a lot more activity that happens in the ecosystem. So I know that's not a very straightforward answer, but I think in multiple ways, as the industry kind of evolves, we want to grow with the industry and then also kind of drive that growth as well.
That's excellent. And I want to kind of backtrack a little bit into, you were talking about the liquidations. What are some of the other major unlocks that you guys are seeing in the market right now as far as NFT finance protocols that you think may be interesting? Or even yourselves outside of liquidations, where do you think kind of the next focus beyond that is?
Yeah, I think the key word that many are interested in and then kind of taking their take on in many different ways is risk. And obviously, like liquidation is one of the risk scenarios, but I think there are many other risk scenarios. So, for example, I think many have been like toying around with options for people who are just holding the NFTs. And, like how do we kind of put ourselves in a right way for like theft. And then so like NFT insurance has been popping up. So I think there will be a lot of like experimentations around this leg of the industry. Prior to the market crash, we did see a lot of derivatives being formed more actively. So for example, I think there has been some partnerships that we did with perpetual protocols as well. But I think with the volume of activity decreasing, seeing that to be a little bit less active in this stage of the ecosystem right now.
Yeah, that makes sense. Terry, I don't know if you have any other protocol questions, but I'll kind of pass it off to you if you do.
Yeah. In terms of the initial foray into the underwriting business, right? Like this is something that we've toiled with at Goldman Sachs. We're very curious. What have been some challenges for NFT Bank, the NFT loans underwriting business?
I think it'll be probably a common challenge with a lot of the other loan originators as well. But one of the challenge I think that was a good challenge was the market size, because I think we were able to establish decent brand in the industry. There have been more people coming to us to actually expand our size of loan origination business. And because the market itself is not as big right now, we are being very, very careful. So that's one of the challenges that we have in terms of increasing the pie of the entire market. And I think there can be creative ways that we can solve or participate in solving that by leveraging our portfolio management solution. So we have just started a new feature where these loan protocols will be able to kind of show their loan offers inside our portfolio management mobile app. And the users of our mobile app, portfolio management mobile app, will be able to discover all these loan opportunities across multiple platforms, which then I think may be a healthy addition to the industry to increase the size of the pie. So these are some of, I think this was a key challenge that we were kind of thinking about, and then trying to solve it in a little bit more proactive way than like waiting for the market to kind of increase.
Yeah, I got it. That makes sense. And on the note of the market being really early, Jen, you said something that was quite interesting to me in an interview. I think you said that at Facebook, you learned to look at customer data and use that to really help inform your product decisions. What does that process look like at NFT Bank in a market that's so nascent that really there aren't a lot of data points?
Yeah. I think in the market right now, not only there are not that much data, but it's like very fragmented, right? So I think a lot of different analytics platforms provide wallet analytics that does not necessarily give you the full picture of what this user does. Oftentimes, user has specific purpose for specific wallets, so it doesn't form the full view, which is the problem that I saw happening at Facebook as well. People, internal teams, only look at the data that they are looking at, not necessarily the full picture. So I had the most fun kind of working on the CRM product because that's where we really aggregate the data and then show the full picture so that really we can optimize the user experience and then the type of things that we recommend them to do. Similarly, I think we can play that role by being the portfolio manager. And then I think as we kind of increasingly become this loan aggregator, or more broadly financial opportunity provider to the users of NFT holders, I think we'll be at a unique position where we can track the behaviors across multiple platforms. Whereas I think platform by platform, they will only be able to show the activities that happen on their specific platform. So I think in this way, getting the comprehensive view of who these users are and then what they are doing across multiple places, I think something that I learned to do at Facebook and then will continue to do here at NFT Bank.
Got it. That's awesome. Is there anything else you would want to share with our audience about NFT Bank as a protocol?
I think something that we're not actively driving, but we're very excited and bullish about, and hope that listeners who are in this field will reach out to us after hearing this, is the P2E industry. When the industry was at its peak, a big segment of our user was guild owners, so scholarship managers. Our place was the only place where they could see the asset value fluctuation in addition to the SLP accumulation. And mean, like without the asset view, they only get the full half picture of their performance. So we're very bullish about guilds or DAOs in the gaming industry forming a pillar in activating the economy in the virtual ecosystem. So we're very bullish about that. Would love to talk to any players who are kind of working on the long-term vision for that field.
And I think the last one to before we close it out is, what do you see in store for the future of NFT finance? Maybe we can talk about that over two maybe separate timeframes. And it's going to be hard, I think, to have a view maybe past like 2 or 3 years, but I'll ask it and see what shot you take there. But over the next like couple years, how do you see like the future kind of evolving? And then maybe when we look beyond 2 years, has NFTBank talked about maybe real world assets coming on chain, the impact of that? Curious to hear your thoughts there.
Yeah. If I may take that shot, I think over the next few years, I think we've already learned as a community what happened in DeFi. I do see a lot of like parallel movements happening in using NFT as an underlying asset. So I think a lot of experimentation and then a lot of the core building blocks being formed with the NFT finance play. And then I think from the user side, because NFT trading was the start of the show as the NFT space took off in the very beginning. Now having people who have kind of experienced that run and now holding on to the NFT, I think the focus will now be more on liquidity rather than the trading of NFT. So, which is why we're very bullish about the NFT loans right now. Many actually kind of send their kind concerns to us when we're working on this, asking if it's okay, given that NFT market is not very active right now. But what we say in response is actually we're more excited because this is going to be the problem for the core NFT users who participated in that bull run. So that's how I kind of see the 2 to 3 years down the line. And then we're kind of in line to kind of build in that phase. I think in the longer term, I wish and do envision that NFT, the word NFT, does not get used like the way it's used today. I think the reason why I had strong conviction when I joined NFTBank is because I thought NFT would be something parallel to internet, where people don't really use the word internet business anymore, or like internet anything these days. Like it's kind of a default technology that we use to empower online business. Similarly, I see every object with very specific purpose being driven by the NFT technology. And as that world comes, I think what we do with NFT finance will parallel what we see in the real world a lot, which then I think can be a lot richer experience in terms of both the people who are participating and then the builders who are building for it. So I would say that's like roughly how I'm looking into the future.
I really like that take. So to close it out, how can the listeners get in touch with you guys at NFTBank, Jen?
Like I said, there are 2 types of users for us. So if you are interested in using our portfolio management solution, I would highly encourage checking out our app. That's where our most active development is happening right now. So go to the Android or iOS App Store and then download our app. And then for the builders in the industry, just reach out to me or anyone on the team to ask about potential partnership opportunities or like just stop bouncing in NFT financialization. Our email is pretty rarely available on the website. So I'm happy to chat there.
Awesome. Thanks so much for joining us.
It was a pleasure. Thank you.
Follow me on Twitter. I'm 0xTayTayHoHo on Twitter. That's Tay with an E. And you can follow Ryan at _Helmass.
Yeah, and that's _HELMASS. Thanks everyone for tuning in, and we'll catch you soon.